The strength in equity markets and specifically sustainability that we saw in November and December has continued. We sort of returned to the Magnificent Seven towards the start of the year. The interesting point to note there is that it's no longer 7 magnificent names, more 4 or 3. Apple and Tesla have started to fall away, 2 names that we don't own in the Sustainable World portfolios, whereas names like Microsoft and Nvidia have kept going, which we do have in a couple of our high quality growth funds. The interesting point of this quarter is this equity market has continued and it's sort of opened up some new avenues of performance. You've had the UK return and Japan has had a really strong quarter. Emerging markets are starting to look quite attractive from a valuation standpoint, and we're reflecting that within the portfolios. Within the Sustainable World portfolios, we've been working hard to make the most of these opportunities that are emerging within markets. As I mentioned, the emerging market valuations are starting to look really attractive. And because of that, we've introduced a new fund, which we believe will make the most of these opportunities within emerging markets. But also, due to the fund's alignment to the UN Sustainable Development Goals, we see a strong sustainable mandate. And we think this is a fund that can be a great long-term holding for these portfolios. Alongside that, we're seeing the continued strength in the US and how this is feeding out into the rest of the stock market. And we're looking to take advantage of that through a high-quality name within the portfolios. We've been on the search for a US fund for a while now to go alongside our existing exposure. And we've found a fund from a house that has been doing sustainability-focused equity investing for 30 years. That was within a global portfolio, and they've built out a US-only sleeve, which we've been able to access at a founder's fee share class, and we're incredibly excited about this fund going forward and the exposure it will bring to the Sustainable World portfolios. We've also been working hard to reduce the fees of your portfolios because as part of our Sustainable World mandate, we're looking to make sustainability investing accessible and affordable. So in reducing those fees, we hope that we can bring a portfolio that not only delivers sustainable outcomes, a strong risk-reward profile, but is also affordable for our clients. Q1 2024 will be remembered as a period where we launched the Sustainability Hub. This is our way of trying to get across why we do this and why we invest sustainably and why we believe you should too. Within the Hub, we've got our sustainable blog, which is written by me. It's essentially me telling you all the stories that we believe are pertinent to sustainable investors right now. What's going on with government policy, or how are your funds investing? How are they generating impact? And trying to bring our clients along that story with us. We also have all the funds on there and why we bought them, what their alignment to the UN Sustainable Development Goals is, and what their carbon intensity is. We've also got conversations we've had with journalists and fund managers where we're trying to get across all the core reasons why we are so excited about sustainable investing right now. 2024 has also seen us become signatories of the UN's PRI, the Principles of Responsible Investment. This is a collaborative effort to bring asset managers together to showcase our commitment to responsible investing and also come together to improve and make sure that we are doing the right things by our clients, but also by our environment and our society.